Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. We're absolutely in a very intense week. We've got a very full agenda for you today, so we're going to get right into it. I'm Eric Auskerson, one of your hosts. So what we're going to be covering is we're going to start off with some broad opening comments from me and Barry Melanson. Then we're going to get into the PPP reopening. Lisa Simpson's going to talk about the latest updates. We've been receiving a lot over the past week. We're also going to do a lender update section with Rohit Arora, the CEO of Biz2Credit, and we're going to close out with a little outlook on 2021 from Barry. You can earn CPE by responding to 75% of the attendance pop-ups, and we also have this bottom toolbar where you can download a lot of materials via that orange button, that orange arrow button, and you can also ask questions. And if at any time your browser freezes up, refresh your browser. That's important, and that will help with the viewing experience. So here are the presenters today. They'll be joining me shortly. Rohit Arora, CEO and co-founder of Biz2Credit. He'll be talking about the lender environment as well as the state of their solution. I'm Eric Auskerson, the president and CEO of CPA.com, the AICPA's business and technology subsidiary. We've got Barry, who's the leader of the AICPA, who you all well know, and Lisa Simpson, who leads the firm services area for the AICPA. So, wow, what a week we're in right now. We had the inauguration yesterday, so we've got the Biden administration moving forward with all of their initiatives already. And in addition to that, the PPP program was fully launched on Monday. So this is quite incredible. And when you look at the timeline, which I'll be getting to in a moment, what you're seeing come out of Treasury during their final couple of days, because actually we received guidance from Treasury on Tuesday, the last day for many people at that department, as the transition's going now into the Biden administration. And all of these stakeholders are standing up, literally thousands of employees. I know there's a lot of anxiety out there with the clients around getting their applications in, their next phase of PPP applications in. What I can tell you is this is a public-private partnership, and we've been connecting with all of these groups, and there is a tremendous amount of work occurring right now, and we're going to talk about that. And what we're just trying to do is bring to you the best available information. So I'm going to ask Barry to join now, and I'm going to have a few more context-setting data points that I'll provide you, and then Barry and I are going to have a discussion on the current environment. But what I ask you to look at on this slide is January 19th. That was 2 days ago. I mean, these days are long right now. And 2 days ago, the SBA opened up the opportunity for all lenders to start submitting these next phase of PPP applications. On that same day, the SBA came out with an 18-page document related to second draw guidance. And later that night, around 10 p.m., they issued the forgiveness forms. So the lenders were standing up platforms as new guidance was coming out. And you really just got to commend a lot of the different groups, because Treasury and SBA, with all that's going on in the nation's capital, were able in a 2-week period to get out all the guidance to support this $900 billion stimulus act, which is the second largest business relief act in the history of the United States. So Barry, just as you look at this slide and what's occurred over the past week, before we get into talking a little bit more in detail about what's happening with the firms, clients, and lenders, just looking at this timeline.
It's a tight timeline, Eric. I think you laid it out great. And I think for all of our members on the town hall, it actually, and you said you download this material. This is a great slide to use with your clients, right? It shows the compression of time and the complexity. And and really, from that, then how the actual loans get funded and the like. It's extraordinary time, right? The times we live in are extraordinary. The overlap of the issues that are going on, like the administrative change, a new law that was passed in the holiday season. All of these things are complex. And, what we add to this, there will be, and we'll talk a little bit about the look, forward and towards the end of this town hall, but you're also going to have clients who are going to hear things in the news about what's contemplated from a business regulatory perspective or a tax perspective. There's just this big role, this trusted advisor role that we've been talking about helping your clients see the opportunities and the pitfalls in all of these programs. There is a part of this that I think our profession can bring, and has done a remarkable job through this, of being a settling voice for clients. On the one hand, the client wants to make sure the money doesn't run out. We get that. We don't see any sign that will happen. And sort of helping the client understand the complexity. There's a lot of people trying to do the right things. As I think Eric said, the government changeover certainly added to it. And part of that, sort of like you've done for years in taxes and in planning, being that voice of reason for the client, I really believe is in play in these next couple of weeks as these things, bugs in the system or a little bit slow one place or the other by the SBA or whatever else. It's really important to be able to have those conversations. You're probably the sanest, most informed voice to be able to communicate that to your client.
Thanks, Barry. And we're going to get into, just thinking about how you want to manage this with your clients. I mean, and we're right now the economic first responders, but when you look at the health first responders in the implementation of the vaccine, to get it right now, there, immediately there's more issues than if you wait. And that's the same case here as we start talking about where things stand with these PPP applications. This is the data that shows what's happened so far. The SBA released some data showing what happened in the first week based on what they received. This is very important. You got to look at what banks say that they have received and what then the banks have to send those applications to the SBA. And we're going to talk about that in more detail. But the SBA had received 60,000 PPP applications as of Sunday. This was from the smaller lenders, totaling $5 billion. Then last night, Wells Fargo and Bank of America provided some stats on what they have received. And this is not what they've submitted to the SBA. I was just on a lender's call, and this data point is about what they've received. They're now in the process of submitting that into the SBA. So when you look at these numbers and we reflect back to April, in the first week of the CARES Act, about $200 billion was submitted to the SBA. We're into the first week, and it's under $10 billion. So all indications are there is going to be enough money. It's a $285 billion program. So with that, I think we all need to just think about what's happening here. First, I've talked about this, the Treasury and SBA guidance. It's a very fluid and there's a lot of real-time issues that they're trying to address. There's lots of questions coming back to SBA every day on asking them for additional clarification. So they're working on that. Then you've got the lenders. They stood up all these platforms and well aware that over the weekend, issues on some of them having maintenance windows and stability and just getting the platforms up to support these new processes. And there's very important security measures that they put in place, and that can frustrate clients as they have to make sure they're using the current browser and things like that. Then you've got the firms understanding the process, then you've got the clients understanding the process, and then you've got client anxiety around the funding. And one thing that we're talking to firms about is think about your clients. There's some clients that it might not make the most sense to try to get their application in right now. Wait a few days for SBA and Treasury to settle down the guidance, wait for the banking systems to stabilize a little bit, and then get your applications in. And I'm actually hearing from some firms that they're using that patience. So Barry, when you look at this, how do you think about it from the trusted advisor standpoint, and just looking at the different pressure points in the system?
Yeah, it's very expected. You know, we live in a world right now when just frank anxiety is at an all-time high. You know, we talk about mental health in a lot of ways. Well, the clients are facing that. And I really do think that as firms, particularly if you look at the size of these loans on the previous slide, Eric, that you put forward, you know, these are small, really truly small businesses and small numbers here. So there's going to be high volume, small numbers as compared to maybe bigger, much bigger numbers the first go around. And then they really need, I think, you know, the profession to help think through some of these issues. For instance, Lisa in a little bit is going to talk about the credit, the ERTC, and you know, there's different strategies about timing related to that, and how you use payroll dollars to be able to maximize both the credit and the PPP loan and forgiveness process. And so while you know the banks are there and the fintech solutions are there, and that's fantastic, it's not automatically pedal to the metal, so to speak. It really is about thinking through this. And as I said a while ago, that's really where the value for the profession really is, including the anxiety that's in the system. You're used to this. If you have tax practices, the frustrations dealing with the IRS, we'll come to that in a moment too. And it's just the mass. It's a big country, you know, lots of small, millions and millions of small businesses, and in the second largest program ever, only because of the PPP program being the largest, the original. And so it is a time for reflection and communication, and it really will tax your capabilities of communications, I think, more than probably any time in your professional career, to handhold clients through that process. And when we talk about trusted advisor, that's what it means. They sort of have that expectation from you. And so that requires you, I think, to do some reflection as well.
Thanks, Barry. And I think one thing that is good to understand is you look at Chase, the largest, you know, lender in the United States, and right now their form requires a client to go there and input it all in one sitting, and they've got a lot of capabilities. Then you've got other platforms, even some of the fintech, and we'll get into our fintech platform, which has a lot of capabilities. And then there's usability improvements that we know we need to make, but you need to understand that this is everybody's, you know, we used the analogy before, we're building the plane while it's flying. So there's a lot of work being done. And I think just understanding that all the different stakeholders, the payroll providers, the lenders, the AICPA, the Treasury officials, and you and the firms are working very hard, and together we're going to execute on this like we did before.
And one quick point on that, Eric, this is about the options, right? Today versus back in April, there really wasn't the type of option now to think through some of these things. And what the system has done, fintech solutions, you know, banks may require things that are not required in the regulations. So you have the opportunity to think about those activities and, I don't know, direct, place, shepherd your client in the right direction.
Well, yeah, and we're in a completely different spot now. Different spot of understanding. Before we were trying to drive the common approach. We're putting out PDFs. Now we're kind of more on the field with the lenders, understanding what's happening here, and working with the firms with options. So this is just a kind of an FYI slide. There's a lot of complexity behind this program. And that just adding to the anxiety. So Barry, we're going to get into this. Is just kind of the last slide for you and I before we bring Lisa in. But it's a question out there. We don't want to kind of spend too much time on this, but the self-assessment of need. What we're hearing is most firms with their clients have a 25% drop in gross receipts quarter over quarter. There's a lot of uncertainty. They really meet that condition. The other thing that you're seeing here, which I think is quite positive, and we saw that from the data, and we're seeing this firsthand from the data that we have, is that there's a lot of first draw appliers. There's a lot of first draw applications this time around that are taking advantage of this, and it's really because of the capabilities of the tents being widened. But Barry, just a quick comment here on the self-assessment of client need.
Well, I'll take the last part first. I think there is a strong intent to deal with some of the underserved areas that were not reached in the first go around, and it's set up to deal with that, as you say, in the first go around, and that's probably driving some of the average numbers down, which is good. I think that's the intent of the program. I think we do have a change of administration, but I believe there will be consistency, that this is the intent of the program to help small business. I think everybody, whether they were in the old administration or the new administration, they understand the really important aspects of the of small business to the economic health and recovery. When we talk about, and Lisa can talk about it more or answer questions, the issue of the calculation test on the decline, it really is using your judgment on what that is. It is not intended to deal with extemporaneous or extraneous type of issues that were not part of the business model. It's about sales. You have a lot of flexibility in looking at what is the legitimate test there. So, for instance, in a retail environment, you got point of sale systems. That's the documentation. That's the real business reality of that particular enterprise. And so there are some judgment aspects that the regulations will never absolutely nail down to the finest detail. That, again, I think our profession is in a great spot to exert that judgment in that process.
Yeah, well said. And I think that and this is one thing you're still going to have to work through the lender policies on all of this. So, Lisa, with that, we'll bring you up, and you've got a number of great slides prepared and some good resources for the attendees.
Thanks, Eric. It was a crazy week, y'all, if you were counting. We have 9 pieces of new guidance just since our last town hall. So what I've done for you is we've got hyperlinks in the slides for all of the documentation that came out in the last week. But we also just created a list of everything that's come out since the enactment of the Economic Aid Act. It's all in one document. It's in your resources for you to download. We'll keep updating that if new guidance comes out, if and when. Let's be realistic. So I'll say some of the things I said last week. The IFRs that have come out are going to be your new best friend if you're trying to navigate the PPP process for your business or for your clients. They're much better organized than they were when they came out in bits and pieces back in the spring. They're very comprehensive. They're not going to catch every corner case, but they are going to give you the basic principles that you need to then apply that judgment that Barry was just talking about to help navigate some of those unusual circumstances. So I'm going to continue to encourage you to actually read and refer back to the guidance. The applications are very detailed now. You've got great resources on how to actually calculate loan amounts and how to calculate forgiveness amounts. So use those resources and then apply your professional judgment. So we'll get started on some of these. I'm not going to go into detail on every single one because, frankly, for a lot of them, it's not a lot of new stuff. But let's get started. So here's another look. I think it's like 2 or 3 IFRs, 4 new forgiveness-related forms, some guidance on how to calculate loan amounts, a couple of procedural notices. So again, busy week. But what I've done, what the team has done, is we've updated that summary document that was available last week to reflect some of the new guidance and the new insights that we've gotten in the last week. So we're going to do our best to keep that as up to date as we can for you. And it is in your materials today, uploaded and ready to go. So make sure that you are checking the as of date on the document to see that you got the most recent one, which is as of yesterday. And it's only yesterday because I was afraid they'd send something out after 7 o'clock tonight and then the dates would get confusing. Here's a look at all the topics that we cover in that summary document. And again, we'll be building it out as we get more and more intel and as we adapt to the common questions that you're giving us. All right, so let's dive into the meat of the changes this week. I'm going to start with one that was a common question that really didn't have an answer, and it's what to do if the PPP borrower miscalculated their loan amount, or maybe the lender keyed in a wrong amount and the borrower ended up with a loan that was higher than it should have been. The guidance that came out this week in a procedural notice basically says the borrower is not eligible for forgiveness of that excess amount. And once the loan forgiveness process has gone through, then the borrower will need to begin making payments on that excess loan amount. Next we have a revised Form 3508S. So if you remember back in the Act, the Economic Aid Act, Congress came out and charged SBA with simplifying the forgiveness process for loans of $150,000 or less. Months ago, the SBA had developed this 3508S simplified form for loans of $50,000 or less. So they've taken the 3508S and they've said that now it applies to loans of $150,000 or more, or less, I'm sorry. And again, this applies for first draw or second draw. It is based on the individual draw amount. So I've been getting questions about, if my first loan is 75 and my second is 80, do I still qualify? Yes, it's based on the individual draws and whether or not they're above or below 150,000. If your loan is 50,000 or less, then you get a waiver from the reductions around forgiveness because you had a headcount reduction or you reduced wages. But if your loan is 150,000 or more, or 50,000 or more, then you're still subject to those reduction quotients. On the next slide, we'll see that, sorry, forward.
Sorry about that.
Oh, yeah. There we go. So that simplified form basically asks the borrower to make some assertions around using the proceeds for eligible expenses and 60-40 payroll split, how the forgiveness has been calculated, and again, the owner comp limits and FTE reduction and salary reduction examples. And on the next slide, we'll take a quick look at the form. You can see, if you look at it, it looks very similar. It's skinnied down a little bit to fit all on one page because that's what Congress instructed. And but basically, if your loan's between 50 and 150,000, you still have to do the math and keep all of that documentation that's required to prove your math, but you have a simplified form to complete on the front end. We got guidance on calculating loan amounts, and I know this has been a recurring challenge since the beginning of the program, but there's really not a whole lot new in that, that guidance document. It doesn't have a name, it's not an IFR, it's not an FAQ, but it's a great resource because it's broken down by entity type. So if you're a Schedule C with or without employees, it's going to walk you through the steps to determine your loan amount. We got another big IFR around, we got another piece of guidance around second draw loans. And this one's really going to be helpful for you if you're helping your borrowers with their second draws. So this is going to give you details on how to calculate gross receipts, a really hot topic, what reference periods to use, what the documentation requirements are, and it's going to address affiliate questions.
There's so much information there. It felt like an IFR to you.
It did feel like an IFR, you're right. We're getting lots of questions about affiliates, and we are gathering those questions and looking to get some insights from Treasury on that topic. I know it's confusing and a little complex, but there is some guidance in that document to refer back to. One of the biggest challenges for a second draw borrower is how to document their decline in gross receipts of 25% or more in one quarter of 2019 or 2020 compared to the same quarter in the prior year. So the guidance that came out gave you some options on how to document that decline. It's what we talked about last week. Use those quarterly financial statements or monthly and combine them into quarterly, and then show for your lender what you're using to get to a gross receipts number. So show your math again. If your borrower doesn't prepare monthly or quarterly financials, then the next step is to use bank statements. And again, show your work Was there a capital infusion that maybe doesn't get calculated into gross receipts? Show that that gets backed out. Barry mentioned point of sale system for our retail and restaurant businesses. You can start with that and then add in your other income that's going to be included in gross receipts, like interest, royalties, dividends, and those kinds of things. There is an option if you want to use your annual tax filing, so 1120, 1120S, Schedule C, whatever. And if the 2020 return hasn't been filed, which for most of our calendar year borrowers, it hasn't. We're great, but we're not super, super, super awesome great. So you can pencil in the amounts that you expect to be reported on the return, attest that that is what's going to be reported, and then submit that as your documentation if you want to compare annual 2019 to annual 2020. Then a lot of questions around what the accounting method is for calculating that gross receipts decline. Refresher on what we talked about last week. I'll hit this really quickly, but don't expect a lot of detailed guidance. If you're using your monthly or quarterly financials, what's the normal accounting method that is used in those financials on an interim basis? Be consistent. If you're using an annual tax return, they gave you an option within the guidance that came out to map it out to the actual tax filing based on the entity type. It is going to look really strange to you when you start mapping. So think about the core concept of gross receipts, and then that might help you as you're going along. And then on the next slide, I want to just hit this really quickly because I think it's important in creating some confusion around when can a borrower apply for a second draw. Do they have to have used all of their first draw? And the answer is, when you apply, you have to say that you have used or will use all of those funds. Before you can actually get the loan disbursement for that second draw, you have to say, I have used all of my first draw funds on eligible expenses. And it's okay to not qualify for 100% forgiveness. So say you had a wage reduction or an FTE reduction that caused less than 100%. It doesn't mean that you have to have submitted your application for forgiveness. We do know that some lenders are requiring that, but the SBA does not. You could have spent your funds after the end of the first draw covered period, but the key is that you have to have used all of the funds on eligible expenses prior to getting that second draw. All right, so this is the IFR that came out on loan forgiveness. If memory serves me, it's about 82 pages. Don't hold me to that, but I'm going to nickname this Forgiveness A to Z. It is going to walk you through the process and all of the calculations that are required to determine forgiveness. It's going to talk about the 60-40 split, how to calculate FTE reductions, etc. A couple of highlights, but only because they're different from what we knew prior to the Economic Aid Act. The alternative payroll covered period is gone because now the borrower has much more flexibility in choosing their covered period. They can choose any period between 8 and 24 weeks. The FTE safe harbor was December 31, 2020. Now, if your loan was issued after December 27, the date this law was enacted, then your safe harbor date is the last day of your covered period. And that's applicable for restoring headcount and salary and hourly wages. If you have a loan in excess of $150,000 and you're taking your second draw is in excess of $150,000 and you want to apply for forgiveness on that, there's a quirk in the IFR that says you have to have applied for forgiveness on your first draw either before or at the same time as your second draw. I'm calling that out to you because some lenders are misinterpreting that. So this is about if your second draw is above $150,000, you have to apply for forgiveness on the first draw and the second draw either simultaneously or get that first draw forgiveness in first. There's a new form. I'm not going to go through S, EZ, and the normal 3508 because they're very consistent with what you've seen before. But there is a new form. I think it has limited applicability, but I just want to call it out to you in case you have a borrower who was controlled by a highly elected government official, such as the president, vice president, or their spouses. So if that's on your radar, then you've got a new form to fill out, and it's available through the links in that guidance document that I gave you in your handouts. Whew, that was a lot.
That's a lot, Lisa, and so thank you, and look forward to taking some questions during open forum on all of that guidance. But that's impressive. A lot of work by your team over the last couple of days. So thanks. So with that, I'm going to bring Rohit Arora up, and we're gonna dive into a little bit of what's happening in the lending environment. I'm always looking at the questions, and one thing I'm seeing is the interest for more communication from the lenders, and that's a great point. And one thing I'll just say is what's been happening is everyone's getting surprised at times. The SBA feed became unstable yesterday and caused a lot of issues. So it takes a little bit of time to understand what's happening with the SBA, and then you get a communication out. With that said, we all can do better, and I know the lenders are working on the one-to-many communication as well as the one-on-one communication. I know that's something, Rohit, that you've been talking about. So I'm going to have a couple of questions for you in a moment. This, we all know, is the lending environment. You got the traditional lenders, and you have the fintech. And what I can say is there's been, I think everybody's making progress. With that said, Chase and Bank of America and PNC, their platforms, there were issues there, usability issues, and same thing with some of the fintechs. But let's talk, Rohit, a little bit where things stand with Biz2Credit now, and then let's also start getting into a little bit of how this all works here. So welcome, great to have you on, and I know your team's been going 24/7 for the past couple of days, past couple of weeks. Why don't you talk a little bit about how the lenders set things up with the SBA and how that all works?
Yeah, no, so I think, Eric, thanks for the opportunity, and that's a very good question. So one of the things that we are seeing is that as we get these applications in, we had initially set up the system to be extremely automated, and the SBA API, the APIs are still pretty unstable, especially for Draw 2. And especially there has been a lot of confusion with sole props and Schedule C companies with incorrect data, which is not the fault of the borrower or the CPAs, but how they got the loan from the first lender. So a lot of time that was not filled out the right way. And in this round, SBA is doing a lot more checks compared to round one. So obviously it's taking more time and there are kickbacks. And SBA keeps changing their API documentation, that leads to some instability in our platform also, because we had put it fully automated. So the steps that we have taken, the lessons we have learned is that, it should be an automated platform, but it should not become a hostage to any SBA API change, and that starts throwing up errors. So now we have made some dramatic changes, and I can say one thing with great pride is that we've got around 4,200 apps from CPAs, and already 3,700 apps have been submitted to SBA. We have more than 300 approvals already for the CPA clients, and they will start getting their contracts. Some are already getting it, but most of them should start expecting getting their contracts from tomorrow. As Eric rightly said, we are also improving the communication between our platform and the CPAs, because I know a lot of borrowers are very anxious. And one issue that we'll have to bear is that once it goes into the SBA portal, we don't get any updates for at least 48 hours before they will either say yes or no. So there's a bit of a period out there where we are just in a suspended animation. And that's where we'll have to live with it. SBA is promising that by next week they will try to shorten that window also and make it better. What we have done over the last 3 days is that we have tried now and I think we have achieved a lot of success, is making the platform extremely stable, irrespective of the fact whether SBA APIs are behaving properly or not. As I said, that was a big learning for us. And doing the SBA submission. So if the APIs is returning an error, then doing it manually. So we have actually assigned a large team of people who are actually manually entering those applications into the SBA system, because we don't want any borrower to miss out on the money. And at the same point of time, making the process as smooth as possible at the front end. We already have got feedback from CPA firms on the updates that had to be made. And as the system has become a lot stabler, and it will become more and more stable and mature over the next few days, we will be rolling out now some of those updates over next 24 to 36 hours. And then constantly after that, we can speed that up. So the idea is that, as Eric rightly said, we are building a plane while we are flying it. So the first thing we need to ensure is that that plane doesn't crash. And once we have achieved that stability, then we are adding more features into it. So as to make the process simpler, better, and also we understand that people are very anxious to get updates, so that they can get the updates. And my feeling is by next week, once people have signed the contracts, some people have got the money, more people will get the money, then I think they will get better. And my only request to all CPA firms is, you guys are very smart people, and have some patience, because we are working as fast as possible. And there are things that we are just trying to solve. And my uh, experience shows that by this end of this week, things will be a lot stabler. One thing I can assure every CPA firm which is working through us is that we will not let anybody's application sit for a very long time with us. And that's a very important piece. And then, we'll move it faster. And next week, you will see that, as loans get closed, people will get more assured, and I think there'll be less pressure on everyone.
Thanks, Rohit. I know there's a lot going on, and one thing we're going to work on the one-to-many communication and more statuses from both the platform and from our direct communication out to all the firms, and a couple of things. I mean, there's features like that firms want, such as a preview of it before you submit. I mean, these are advanced features. And the team, we have been working on this not just for the past couple of weeks, for the past couple of months. But if you even look at some of the bank platforms, you can't even save the file. So we're going to continue to work on this. It gives firms a capability to offer to their clients. I do think, as we talked about at the beginning, you don't need to get every client application in right now. There's going to be, all indications are, there's going to be enough money. So if you have a client that is not as technology forward, you might want to wait a couple of days for more of these improvements to be made, so the processing is more straightforward. Ro, when you look at this slide here, these are the steps. The eligible client, firm processes the application with their client. Then you submit it. The lender could kick back things, and we're seeing that the lender kicks back and says it's not filled out correctly. Then the lender submits it. Then the SBA, there's another loop here. They can kick it back for a number of reasons.
Yeah.
But then, so when you see this here, and these are the statuses that we are looking to do in real time on the platform for you. And I know the lenders are too, the big lenders at Chase and Bank of America, but everybody's trying to understand what's happening with the SBA. So this is something that I think will improve over the coming days, but I'll let you comment a little bit more on how you see this flow.
Yeah, so I think this flow is actually pretty accurate, and we'll see that, especially as we start seeing more deals above 150 in draw 2, we will see a much more review by the lender themselves, and a lot more the kickbacks happening back to the firms even before it gets submitted to SBA. Right now, most of the volume we are seeing is either below $150,000 in draw 2 or draw 1. So I think that's going to happen. Having said that, what our experience shows that, as things get settled down, and so the key thing is that we just need to get a little bit more time with SBA to just figure out that what statuses are they returning, because a lot of time their API just doesn't return the right status. And they themselves are saying to us that don't depend on that. If that's the issue, then go to a manual UI and check it. So obviously that's what we have learned, and we are doing more and more while we are working very closely with the SBA technology teams to go in and also fix some of those issues. And one thing I can tell you guys, at Biz2 Credit, we are giving our first attention is to CPA firms. We are capable of handling very high volume. We have got over 70,000 apps, so much more than Wells Fargo or Bank of America. But at the same point of time, we are very focused on giving the great client experience, whether there's a CPA or their clients. The only thing is that we are just running at such a great speed with so many changes happening that we are just also training our sales teams, our customer support teams on that stuff. And the idea is that we are gonna get better and better. And obviously, we like your feedback, because if there are some new features which will help you guys to make it easier for you and your clients, we are paying a lot of attention to that, and we are gonna make some updates. The only thing is, we are not trying to make all the updates at a very rapid pace, because that makes the stability of the platform a little bit into question. So our main aim first is to stabilize everything, which is now more or less done. But at the same point of time, just keep track on that, and then start rolling out some of these updates. And we expect more guidance coming from SBA next week. So that's a very important piece, that funding before funding, if there's any more guidance coming, then we should actually incorporate that. Otherwise, what will happen is that once they sign the contract and another round of guidance comes in, then as a lender and as CPA firms, we might have to go back to the borrowers and get some more documentation. So I'm trying to avoid that experience happening. Our aim is right now is to get as many apps into SBA and get as many approvals, and then start sending out the contract so that people can sign it, and then start funding sometime early next week. And after that, really accelerate it, because we hope by then things will be a lot more stable with SBA.
Well, Rohit, I'm going to bring Barry up. I mean, that was a great overview here, and I think that's as we all see here. There's sometimes a 48-hour period that we're in the dark with the SBA, and there's other elements that we need to wait for as this all processes. I appreciate Biz2 Credit's focus on putting the firms first, and getting almost 90% of those apps submitted already to the SBA. So thanks, Rohit. We'll bring you back up for some open forum now. So let's I'm going to move to the next slide, and we can bring Barry back up. And Barry, you listen to that discussion as before you get into 2021 outlook. We went a little bit into the weeds there, but I can tell you by looking at the questions here, that's what you need to do sometimes, is get into some of the particulars.
No question about that. Eric and Rohit did a great job, I think, talking about, making sure that the plane we're building works. I do think, frankly, what's been brought forward, again, I think it's about options. And, there's the traditional options we've talked about. The banks might require things that the SBA is not. And I think Rohit and team are doing a great job of trying to make sure that we're doing what's required, but we're not trying to overburden the system, and make it really work effectively for the members' clients or employers.
And that was a great point there. And they're listening to us on the guidance and on these features. That's the thing. Many of these other lenders, they don't have really any interest to work with firms. So that's the other thing. We have somebody, and this is the evolution of finance. And I think that's important. So
That's right.
I think everybody should think about the adoption curve and do this in a measured way. And we're going to keep at this. And as you know, the team's been going 24/7 on this. So for Barry, now let's just kind of outlook. Go ahead. Sorry.
Yeah, the team has been fantastic. And there's a lot of things in the profession, not just in this space. I mean, there's a whole major project on auditing in the future. That's about changing a whole environment as well. And that is the world we're in with technology. And I think building that sort of muscle mass to be able to handle that as a profession is very important. As it relates to the tax situations in general, I'll just hit these real quick. Obviously, the service levels from the IRS remains a very significant point of concern for members of all size firms. We are absolutely on that. I will say again, there are great men and women at the IRS. There are things that are hamstrung here. There's clearly a backlog of issues. There's sort of this ping-ponging of things going out over things that have not been addressed already, where responses have been made. We are constantly, in fact, Congress is involved as well and saying that this needs to be fixed. It's not going to be fixed overnight. The penalty abatement issue ties to that. We continue to work on the need for a simple process to get tax abatement or penalty abatement, excuse me, as it relates to COVID-19 issues. Everything from how that is done, can it be streamlined? Can it be done over the phone that's actually answered? There needs to be improvement in that, and we've been very, very vocal, and as well as Congress. We support the permanent notion of e-signatures. We continue to push for that. The number one question that all is getting, and it's obviously important, is the 2021 tax due date. Will April 15th be extended? And also ties to the fact that there's an IRS notice that said, tax season wasn't going to start till February 12th. Let me just clarify that point. That does not apply to corporate returns, does not. So corporate returns are being accepted. Those can be done and when they're ready. It's really on the individual tax side. That probably wasn't clear in some of the communications that came out about that from the service, but that is the fact pattern. Now, what about April 15th? Well, let's step back. In 2020, the debate about moving the tax due date from April 15th beyond April 15th was really all being done in real time, right? COVID hit towards the end of March. It really was an early April deadline. We certainly understand that this decision, if it's going to be made, needs to be made sooner rather than later, because if it's done right before April 15th, it doesn't relieve any of the pressure points of workload, et cetera. We are actively engaged in this issue. I will tell you, with all honesty, our membership is very divided on this issue. There are a lot of people who believe it should be, and there are a lot of people who don't. The IRS service levels are a factor in this. If the IRS is not in a position to be able to really effectively administer the system, that has an issue. So, we need a decision sooner rather than later, and we will decide what position we take relatively soon as well. There are other complexity points and maybe other solution points. For instance, potentially, if the percentage you have to pay in with an extension, we all know maybe it doesn't make sense to have to file an extension, but if you have to file an extension, it's the issue of what threshold does the taxpayer have to meet. If that threshold is lowered, then those tax calculations can be much more macro rather than precise, and that is a better situation. The state tax complexity is a big one. The decision at the federal level, if there's going to be one to extend the due date, needs to be done sooner rather than later, because states moving or not is going to be a big important point about whether or not that creates any really relief in the system. I would also say that, we have a new administration. This is a decision that's ultimately made by Treasury. And so they're literally in office for a day. And so we got to let a little bit of time for that activity to work out as well. Mobile workforce, we have worked really hard on that. There has not been relief to that. It will be a highly complex issue as it relates to state taxation or cross-state taxations. And those of you in SALT taxes are going to have a lot of issues on that. Next slide, Eric. I think also, so what does it mean from a new administration? Just to give you a sense of that with your clients. First off, the majorities in the House and the Senate are very, very narrow. Yes, 50-50 in the Senate. Some of these things can be passed through what's called reconciliation, which only takes a 50% vote, which means the vice president could break that tie. Some of these things, only certain things can be done through that process and may take a higher threshold in the Senate. The House majority actually narrowed. The Democratic majority is much narrower than it was in the last Congress. It means that just a handful of moderates in the middle on either the Republican or Democratic side will have a lot to say with what ultimately passes. There will be debate about all sorts of issues. Here's 6 or 7 of them, 8 of them on the screen. There will be probably another 20 that you'll hear and your clients will hear. There was debate yesterday coming out of Treasury about the potential of taxation of unrealized capital gains. I think, again, being that stabilizing voice, not everything that is discussed or thrown out there in Washington is going to get passed. It also is not going to get passed very quickly. They're going to focus on other things, COVID, more relief and support for taxpayers and small business. This will probably be later in the year. And then the effective date, whatever gets passed, becomes a really important issue. Typically, that is the date of enactment or a prospective date. But in all likelihood, probably date of enactment, but it's always uncertain. Look, corporate income tax rates will be debated heavily. There is a U.S. global competitiveness issue that comes into that. You can see some of the things on here on SALT limitation. That will clearly be an agenda item that will come about because of the states that have that SALT limitation really has a negative impact on. Clearly there will be a bifurcation of the taxpayer base and some attempt at additional rates at higher income individuals. We probably will see IRS funding shortfalls addressed, which hopefully address some of the service issues. We'll see enhanced credits at the lower income level. So all of these things are in play. Whether they pass and what that looks like is going to be subject to debate. And again, everything you hear said, even said by the president, doesn't mean necessarily that they will be enacted. Next slide.
Yeah, Barry, just on that, I mean, one thing on the business, we know the current PPP program ends March 31st. The questions we have even coming in, is that going to be extended? To be determined. If there's funding left over, they may decide to extend it as they're looking at this $2 trillion stimulus bill that the Biden administration is putting forth. There's going to be some other business stimulus that we can take for certain. So it's just going to continue, and then we're going to get into forgiveness. So with all of this, Barry, you look at this slide. I know you think a lot about strategies, and this year, firms are saying, wow, there's so many problems, so many opportunities to address. So this is something that we're going to have in a future town hall, probably have someone like Bill Reeb try to help think through this. But any thoughts that you have, and then we'll move into the general Q&A.
Well, we're in a period in which partnering, or some would call the term co-opetition. I think not every firm, particularly there's 44,000 firms in this country, and the vast majority of small firms. Not every small firm can tackle every opportunity that's out there. And there are partnering arrangements among firms, among networks of firms. There's ways to make sure that doesn't erode a client base through client service arrangements and agreements. We have samples of those types of things through PCPS. So there's just so many moving parts right now, and so many questions that your client has to ask and I grew up in a small firm. So there's always this fear that I lose the client if I am not the one that can deliver everything. But the fact of the matter is that in today's world, there is much more opportunity to have a sort of a collective view, and maybe different resources, maybe another firm, to come together and do one part or one area. And an individual firm can really look at where they can maximize the effect on their clients, where they can maximize their own financial success in that process. And that, in a busy time, tends to not be top of the line to think about, but it's probably from a firm management perspective, it's one of those things that firm owners really need to find a little bit of time to think through, sort of a strategy approach and a prioritization approach.
Well said. And it's always about this adoption curve here. And right now you're thinking about, what clients to support, a lot of anxiety in the system, and think through that. And now let's kind of go. We've got a lot of questions coming in, so we can go to we got the four panels here. Bring Rohit and Lisa back. Wow, I mean, this is a sprint day. These are it's Thursday, So and if Rohit's still here, he can come back online as well. So I know we want to kick off with an ERC question. So let's do that, Lisa.
Thanks, Eric. We're getting a lot of questions about ERC. Has the IRS released any guidance on how to layer PPP and ERC? Do we know how to take credits for 2020 if we didn't take them back in the third or fourth quarter? We are anxiously waiting and anxiously advocating for that guidance to be out as quickly as possible. As a reminder, there is a webcast tomorrow that's going to give you a deeper dive into the ERC aspects for both 2020 and 2021, because the legislation that was signed on December 27th does make enhancements to the ERC program for 2021. And of course, as we know, it freed up PPP borrowers to now go back and claim ERC. We are waiting for that guidance, and as soon as we get it, you'll probably hear us all clapping our hands, and you'll get a bunch of emails and Twitter feeds and LinkedIn notifications that it's out. Now let's see what it does. So I would ask you to consider, as you're working with your clients on whether or not they're going to apply for PPP2, if you think they're going to be eligible for ERC in 2021, give serious consideration to separating the PPP funds into a different account when they're received, rather than immediately starting to use them for payroll, because that can give you some flexibility in how that layering is going to work. So consider that as an option. If you get your PPP funds quickly, you may want to set those aside while you're navigating ERC and the layering of the two programs together.
And Lisa, I think we would add that maybe that could be a reason not to apply as quickly, even because if you're thinking you're going to qualify for both of those, that might be part of the strategy. And you can comment on that, but I would also just say to the people online, this is a big deal. This area of dealing with the complexity of how they interface can mean a huge difference to your clients.
Thanks, Barry. We've got here's just a good question for Rohit coming in. Somebody submitted a PPP2 application, Draw 2, and they didn't have, now we know, and the documentation information came out about having to sign those statements. So Rohit, I know you know how to manage. What's the next step for the client there?
Yeah, so the next step for the client is, and that was causing some confusion, and that's how we have kept it in the UI, is that client can log into their account and can upload that document. So that's why we have two things, which is very important. Some CPAs and their clients are getting a little confused. It was like there was a review button, which was green, and then there was still upload button. So the reason we kept the upload button still was that we knew that SBA will be making some changes. So the borrower can just log into their account and then can just upload the document. It is below the review button. And once they do that, the system will get automatically updated. One of our underwriters will actually review it, because that's what now SBA wants us as a lender to do. And once it has been reviewed, then we will submit it to the SBA. So one thing to keep in mind is that any loans which are above 150 in Draw 2, that will take a little bit more time for us to submit it, because we'll need to do manual verification. Loans below 150, we have automated the verification process. So that's why we are able to submit them at a very fast pace right now.
Well, thanks, Rohit. And that's just the thing. There's a lot in these capabilities here. So these are things that, we're probably going to have some, quick webinars that we roll out, training sessions to better understand the platform. We are stepping up some of our customer service support, and we continue to work with the AICPA PCPS team on understanding all of this guidance. So with that, we're out of time here. So I'm going to go to the kind of resource slides right now. Rohit, I want to thank you for all that you're doing for these firms and for helping us deliver this business relief. And Barry, absolutely thank you for your leadership in this very, very important time.
Thank you.
And thank you, Eric and Lisa, for your fantastic work and the whole team, because it's been a hectic week.
Yeah, it sure has. So here, and you can stand here. Here's the recent town halls. I think they're pretty much self-explanatory, Lisa. So people can access that. You've got the PCPS section. Anything you want to reference, Lisa, on what's being pushed to that? I mean, you've got that great 15-page
document. Just my fifth reminder of the day to use that summary document that we're updating for you as your first stop for questions.
And here's just the CPAloanportal.com, and we're going to continue to kind of work on just communication on a daily basis related to what's happening there. And then we've also got the town hall series now available via podcast. So this is how you can download it. We're continuing to use social media with breaking news, as well as just putting out statements from the AICPA, and the Journal of Accountancy is another great resource. I saw some comments coming in on that. Jeff Drew has been as busy as anybody, as the whole J of A team has. So this is where we're at right now. As we say, we're in sprint weeks. We're working hard. You're working hard. And we're going to be doing another town hall next Thursday at 3 p.m. You're auto registered for that. And we will stay in touch with you via other channels as well. Thank you very much. I know there's just a lot going on. We're working as hard as we can, as you are. And thanks for your time today. Thanks for your questions. And we really do enjoy being with you. We always learn a lot, and we hope you continue to navigate this difficult time over the coming days with your clients. Thanks for attending. That's all for now.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.